Welcome back to the channel where we talk all things stock market investing and long-term dividend gain. If it's your first time checking me out on the channel, do me a favor, hit that subscribe button. Trust me, you won't regret it. And if you're a current subscriber, welcome back. Guys, today I want to talk a little bit about some of the stocks that I have on my watch list and a few stocks that I own that I've been constantly dollar cost averaging before this whole economic thing even started. And I want to talk a little bit about some of the stocks I have in my crosshairs, in which I want to pull the trigger on later on, no pun intended. Now, these stocks are either stocks I currently own, like previously stated, and I continue to buy into. B, they're stocks that I love, always wanted to acquire, but never really jumped into it, or they were so high, with the points that I thought would be a good buy-in point, it might be a little bit time because they're coming down to the time of me wanting to make a purchase of them. Or C, these are stocks that I've always wanted to have, like I previously stated, but I've sold them. I've had these stocks before, but I've either sold them out of like naivety when I first started, jumping from one stock to another, and they took off and I didn't have a chance to come and buy back in at those prices. So that's what these are. Some of these stocks right here. Now, some of these stocks I do own, so we'll jump past that. But let's get this thing started. The first stock I'm going to talk about, a lot of people are talking about it on YouTube, is the stock Visa, right? Now, Visa deals with payment processing and the like. Everybody knows what Visa is. But Visa is one of those stocks where, the price is always up there. And a lot of people, small-time investors and people that dollar cost average like myself, you're like, man, I don't even know, I don't even know when the stock's going to come down, or I don't want to buy it at this price because, it's just too high. I can put my money elsewhere in other properties and other stocks that I have in my portfolio that I could get more shares out of and pay a higher dividend than Visa at the time. But sometimes you shouldn't look at that. You should look at the big picture of why you're adding the stock and the returns the stock can give you over time. Now, true enough, Visa is, a stock that's affected by the economy. And, thus we got the price where it's at. But Visa will always continue to rise because people really don't carry cash no more, and it's just the way payment processes is. It's very easy to give a card number over the phone, on the internet. Making payments is very easy to do that, where cash is no longer necessary to carry on you, and Visa is always in play. But right now, Visa currently sitting at $178. Me personally, if it hits 174, like I have in my Ameritrade account for the alert, if it hits around 174, I'll buy in. Definitely buy in, because you gotta look at it. It's coming off of a high of $237. So you got room to grow. Especially with something dealing with payment processing and Visa and MasterCard. American Express at the top of the line. So just a small stake in that will go a long way with me building on my position in the Visa, right? Second thing is a stock that I love, I talk about all the time, and that's Tesla. Tesla's sitting at 282 today, right? As long as if it gets down under 280, when I brought in on it, I'm buying. It's coming off of a high of $414. This is post-split. It hasn't been $414 after split, but you know what I'm talking about, like as far as when you break the split down, the equation of their high, 52-week high, would be $414. So as long as Tesla drops under 280, it's something for me to take a look at and buy into more of the position I currently have in it. Third stock I want to talk about is Alibaba. Now, Alibaba is a sleeping giant. Deals in the e-commerce space. Same thing as Amazon, but in a different region over in Asia. It's not a bad company at all, and it has a lot of growth potential, and it has a fan following. That's the big thing. Now, this stock right here 52 weeks ago was trading at $82. I mean, $182. Today, presently, we're sitting at the stock. Stock is sitting at $80, guys. $80. And it's all because of what's going on with the spending, recession, and the economy, right? Now, is there anything wrong with the company? No. Now, a lot of people say, oh, well, the company's based in China. China's having these problems over there. It's not going to last forever. That's a major, major economic country. You know, it's not a small country where they can't manage their debts and stuff like that. China's going to be all right. And it's long as it's under $98 where I brought in at, I'm gonna keep buying. You know, whether it's now or next year, because think about this, guys. They're talking about this thing going 2, possibly 3 years of up and down in the market, right? Now, we're early into this. These stocks could drop even further. Hopefully they do. You know, what a lot of analysts and people are saying on TV, economists, it might happen. But me personally, the way I look at it and the way I run my portfolios are, I'll go and stake a claim at a certain price. And if they keep falling and being on sale, I'm going to jump on them and I'm going to grow. So once this thing, you know, because you got to remember, you're trying to build wealth. If you're trying to build wealth and these stocks are dropping, whether they're dropping cents or dollars, it gets you that much closer to financial freedom in the end. When everything turns green and the market turns around, you could say you were there in the beginning, and then as the market grows, so does your wealth, so does your freedom, so does your ability to do what you want instead of doing what you have to do, right? Now, that's Alibaba, right? Another stock that's been beaten up as of late. Just had a earnings where they pre-warned about the earnings. The earnings came out not too good, and that's Nvidia. Nvidia is a stock I currently hold. I brought Nvidia in 2017, I brought Nvidia, and I brought in around $120, right? I sold most of my stake, but I quickly brought back in, but I had already missed a lot of the gains that when it first took off. Now, as far as Nvidia is right now, it's trading at $125, right? 74 cents at the time of market running right now. Now, it's coming off of a high of $346. Now, granted, once everything turns around, it's plenty of growth. Will it get back to 346? I don't know. But, I mean, from 125 to 146, you know, sky's the limit. We don't know. But, I mean, the stock performed well for me ever since I've had it, and I'll continue to make more. I mean, buying more, right? As the price hits 120. Another stock, Nike. I just did a video on Nike that I'll leave in one of these 2 boxes at the end of the video. I really like Nike. And right now, Nike's trading off of its high of $179. It's trading presently at $98.85, right? Now, as long as it hits $95, because I had predicted it hit $95, $94 by the day. Today, it did that yesterday. Today, which is Wednesday, is sitting at $98.85. So, as long as it's under $95, I'll buy in. You know, I mean, even under $100 right now, to me, it's still doable. But I mean, I've gained a little bit from the amount of shares I've bought so far. And early into this economic recession, I think the stock's going to go back lower. So, coming off of a high of 179, I don't know if my name previously said that or not, but it's definitely in play. Another stock, here we go, AT&T. Now, a lot of people, AT&T is one of them stocks, but you like it, you don't like it. Most of the people that have it for the dividend. They're doing good in the streaming market, telecoms, all that. They're getting beaten up in the market, you know, the sector. But AT&T has always been one of my ride or dies. I had it in the beginning since I've been investing, and it's been producing dividend after dividend after dividend faithfully to me, so I have no reason to complain with the stock. Now, stock pays a 7% dividend, currently trading at $15.87. So that's 7% of $15.87 a year you get back of your money in dividends. Can't go wrong with that. It's trading off of a high. This is of $21.53. Now, remember they broke off with Warner. They had that spinoff. Now the spinoff is contributing to the price being down. Now, as long as it's under $17, I gotta buy it. I gotta buy it. Like, I've been buying that 2-3 times a week, you know, in increments, depending on, you know, how business is going. You know how my business is going. I've been buying that faithfully so long, it's almost hard to stop buying. In fact, it's one of my highest positions in one of my portfolios. Now, another stock, Google. Google's a no-brainer. You know, #1 search engine in the world, and it's presently trading right now at $99.37, coming off of a high of $151.55. And the thing about Google got money out the behind, and they got good management team. Their price to debt ratio is good. You know, they're doing well. As long as that's under $100, it's a definite buy in my book. Now, do I have shares of Google? Yeah, but I have them mainly in my ETFs. So I don't know if I'll make an investment in Google right now. Like I said, it's coming off of a high of 151. It's presently sitting at $99. Google's a definite play. You know, for someone that wants to get into, you know, FANG stocks and things like that. Google's a good choice. Moving to the next stock. McDonald's. Can't go wrong with McDonald's. Depression and recession don't matter. McDonald's got that dollar menu. They're going to keep kicking things out. People going to always go to McDonald's. It's like an American staple. Well, it's a worldwide staple. And McDonald's is just one of those stocks where you can't go wrong. You know, presently, it's sitting at $237.54. Coming off of a high, 52-week high of $271.68. Now, hopefully, I don't know if the stock will go back this low, but hopefully, if it gets around near its 52-week low of like $217, I'll jump on it. You know, because I mean, McDonald's is one of them where you buy and hold forever. You know, so if I can get me 3 or 4 shares of McDonald's out of this until we have another economic downturn, I'll do that, because McDonald's is one of them buy and holds forever. You know, just McDonald's by itself, if you could get enough shares, you can get rich off of McDonald's. And that could be only stock. You know, so I mean, that tells you a little bit about McDonald's and the space they're in. You know, that, I mean, you know the McDonald's symbol. It's like Nike. You know the McDonald's symbol all over the world. You can draw it or show a picture of it, and everybody knows where McDonald's is, unless you know you're in some type of remote country that's cut off from the rest of the world. McDonald's is all over. So that's definitely a play. This is another stock. This stock is my favorite. I only got 1 share of this stock. All right? And it's Costco. You know, I heard a long time ago when I first started getting into investing and didn't really know about numbers and stuff like that. And I was looking at Warren Buffett and Charlie Munger. And Charlie Munger was like, look, I got more shares of Costco and I'll never sell Costco. I'm like, Costco? What's so big about Costco? What's cool about Costco? Then I figured it out, you know, why Costco was so good. And then, you know, the way their management, not their management, the way they run their business, the style that their business is set up at is something unique. But Costco is trading right now at $487.25. I'm looking at the TV, in case you wonder why I'm looking up. Coming off of its low, I mean, it's coming off of a high of $612.27. All right? So we're at 487. Now they having news later on in, I guess, in the spring, April, May, or whatever, that they might be raising their membership rates, right? Now, I don't know how much that's going to affect the stock, and I don't know how much the stock will fall, because we're getting all this depressing news and all this stuff, and like all these investors are jumping in and out. So you never know what's going to happen with these stock prices. They might skyrocket up, or they might just drop. Nobody knows for sure, but I'm just going on my experience and what I think is going to happen. I'm not an expert. Don't shoot me down. But yeah, if it goes under, my strike price with that is under 425. If it goes under 425, I'm all in. You know, because I mean, I've been wanting to acquire it. You know, I have one share, but I've been wanting to acquire it, but at that price is so high, you know. But anything that drops that price down anymore, it's a definite no-brainer with me, because I mean, getting back up to that high, I see it getting back up to that high, and the amount of shares I could buy at any given time, at the time where it's 425, could really jump my portfolio. Because, you know, guys, you don't have to have 40 and 50 shares of stock and buy those all at one time. You build in increments. That's all you do. You're building in increments. One share turns to 5, 5 turns to 10 over time. You know, and then you build your portfolio blow up. You'll start to see it. This is a stock I own. I have a lot of this stock too. It's a real estate investment trust. And I learned about this last year. This is Vici, V-I-C-I, right? That's the ticker symbol, Vici. It's a commercial real estate investment trust. So it's a REIT out of Las Vegas. They own stuff that is around the Las Vegas Strip, and some of the stuff they own is on the Las Vegas Strip, right? Now, I don't think they own definitely the casinos, but they own the land the casinos on. The casinos on, so it's a definite pick for me. So the generation and cash flow is always going to be there for them. And the thing that's cool about Vici, the pandemic and all that stuff, you know, affected Vegas really bad. It didn't affect Vici. Everybody paid their the leases were paid on time. They got a good rep with their tenants, and it's a worry-free investment for me. So I love Vici, and I made a significant buy into that company, and it's a cheap company right now. Right now, it's presently at $30.61. My buy-in with Vici is about $27. If Vici comes down to $27, I'm gonna buy some more shares. It's coming off of a high, 52-week high of $35.29, and Vici is an excellent real estate investment trust for your portfolio. If you do if you do your history on Vici, it might be a good stock for you to check out. Last but not least, I'm a financial investor. I like dealing with finances and bank stocks, payment processing stocks like Visa. The last stock I'm going to talk about is the #1 bank in America, and that's JP Morgan Chase, ticker symbol JPM. Man, right now it's presently at 107, right? And it's coming off of a high of $172.96. Now, I've always liked JP Morgan Chase. I bank with JP Morgan Chase. I've been a customer for years. And if this stock right here drops to $104.50, guys, I'm all in. I'm all in. I have presently 10 shares of it, you know, but if it drops down to 104, which would be like $1 under what I brought in at, you know, I plan on making some significant additions of JP Morgan Chase to my portfolio, you know. But last not least stock I'm going to talk about, I thought it was JPM, but it just hit me what I was thinking about saying. I'm going to talk about, it's not really a stock, but it's the ETF, and it's Vanguard S&P 500 ETF, which is basically VOO. That's the ticker symbol, right? Now VOO was at or near its 52-week low last week, right? Now it's trading right now at $338.74. If it drops to 340, I'm all in. I mean, right now it's a buy. But see, the 340 for me is the S&P 500 as a whole, on track with the positions and the predictions that a lot of analysts and economists are talking about on television about what's going to happen with the market. But it's definitely a time to buy in on VOO. If you guys have portfolios, now you don't have to take my advice. Don't take my advice, but do your research. But hear what I'm saying. If you're buying a bunch of stocks and you don't have no ETFs in your portfolio, and you're looking for some type of stability with the rise and the fall of what's going on, and a somewhat slow down a roller coaster ride, you definitely got to get with VOO. VOO is the top 500 companies in America, and it's a definite play. It's coming off of a high of $441.26. Now that high is when the economy and everything is running smooth as planned, which it will get back to. So that 440, right? That $440 is going to return over time. Now, when they say, you hear me saying, hey guys, they're talking about this thing might go 2 to 3 years, right? Once everything's straightened back out, where you think that VOO S&P 500 ETF is going to be? It's going to rise with the market. That means the market, the S&P and everything's going to be back to where it's going. It's going to be off and running, back to where it was at prior to the problems we're having. $444, and it's right now at 338. As long as it's 340 and under, I'll be buying, especially Friday. Friday, I'll definitely jump on that. And guys, a lot of people are putting their money in financials, technology stocks, and healthcare, and you can't go wrong with them. But like some of these stocks I named are in some of those 3 categories, so they might be worth taking a look at. If you have Robinhood or M1 Finance, I don't know if M1 Finance does, but I know Robinhood deals with fractional shares. It might be a time to start staking some of these stocks right here and build positions in them, because a lot of these stocks up here, a lot of billionaires and millionaires have them in their portfolio. You want to make quiet money, these are the stocks you want to look at. Heavy hitters, big stocks for the most part, right? So, excuse me. That's all I wanted to talk about, guys, today. And as usual, like, comment, subscribe, share the video. I hope the video gave you guys some ideas. And if you have some directions on where you want to go with your portfolio, or you think I left the stock out, let me know. Drop me a comment. As always, I respond to all my comments, whether they're good or bad. And I appreciate you spending time with me. And I'll see you guys in the next video. Thank you.